My name is Ken Sonoda, and I'm Vice President of Development here at TechSoup. We are here today to celebrate the completion of a two-day workshop that happened here at TechSoup, led by the amazing team at Impact Finance Center, focused on corporate financial innovation and impact investing. These last 2 days were amazing. We had a full room upstairs of representatives from corporations, from philanthropic organizations, and from impact investing funds, all learning about how to bring impact investing and integrated capital strategies to their organizations. And you'll tonight have an opportunity to hear from some of the people that participated and to learn some of the insights that were gained over these last couple of days. On behalf of the team at TechSoup, I'd like to say that we were thrilled to host this workshop these last 2 days and this event here this evening. I believe strongly that the work that Stephanie and the Impact Finance Center team are doing is really revolutionary and making a huge difference in making it possible for social enterprises like TechSoup to raise the capital that we need to grow and accomplish our mission, and also opening up lots of new capital to solve important global issues. Proud to have been a partner with you on this program. So thank you so much, Stephanie, and to your team for making this possible. And we're also at TechSoup really eager to share with you some of what we've learned over the last 2 years doing an impact investment-oriented growth capital campaign, engaging all of our stakeholders as impact investors. It's been an incredible learning process. Thanks to many of the people in the room here who have invested in our campaign, we've raised $8.2 million out of the $11.5 million that we've set as our goal. So we're really, thank you. And Rebecca Masisak, our CEO, is on the panel, and she'll share with you some of the learnings from our campaign, which we're very eager to share. So with that, let me turn it over to Stephanie Gripne to take it from here.
Thank you so much, Ken, and welcome everybody. This is our pilot two-day class, Corporate Financial Innovation and Impact Investing. And how many participants do we have in the audience still? Thank them for making this happen. They went through for 2 full days with us, and we couldn't have been happier to host with 2 really important backbone organizations, TechSoup, which you're going to learn more about, and Net Impact, that is led by a new CEO, Peter Lupoff, that's here today. So we're going to keep this pretty short. We're going to ask 1 to 2 questions of the panel and go through the panel and have them talk a little bit about their origin story, the big why, how they got here, why they're even interested in the concept of impact investing, and then we're going to ask for 1 or 2 of the participants of the last 2 days to step up. And so we hope to keep this short and sweet, but give you a sense of the true innovation that's happening around full spectrum capital, catalytic aligned capital, and what's possible, especially as you bring this into corporate America. And so with that, I'm going to start with our host, Rebecca, who is an amazing CEO. And Rebecca, why don't you give us a background of really what TechSoup is, the enormous impact that TechSoup has globally on civil society, as well as how you got into impact investing.
Okay, thanks, Steph. Hopefully, can you hear me? All right. I don't turn very well, so if I don't turn over there, it doesn't mean I don't like you. I do, but it's just a neck problem. So TechSoup is a nonprofit organization that was started right here, founded in the Bay Area, but now we're actually an international network of 60 NGOs, and we're helping with technology capacity, digital transformation as a mission in 236 countries and territories around the world. And we do that in a really deep partnership with 60 NGOs who are all capacity building partners working together. Very diverse group, but at the same time doing some things in unison together every day. And we also are a multi-sided platform. And on the other side of it, we have relationships with about 100 corporations, many of whom are providers, some of whom are here today, and also with a few hundred foundations to help facilitate some of their international grant-making tasks. And we also work with 5 or 6 government agencies as well to build their philanthropic programs and scale them around the world. So that's basically what we are. We have reached about 1 million nonprofit organizations and libraries around the world. There are 12 million. So hence the need to scale. And so we know there's a lot more need out there, and we know that a lot of the things that we've already been doing and that have already been invested in can be highly leveraged around the world. And that's what we want to use a technology platform to do, and continue to build that out. And so about, I think it's really 3 years. I think the talking point said 2, but I think it's really about 3 years ago. We were thinking a lot about being disrupted because of cloud computing and lots of changes, lots of big data headlines, and kind of what was going to happen in the sector to our beneficiaries and audience, but also to the corporations we were working with, whose business models were changing, how they were thinking about philanthropy for their products or CSR or their various impact strategies were all changing. So that meant that we had to change as well. And we developed a pretty solid strategic direction, I think, with a pretty decent process for doing that and lots of engagement from various stakeholders. And then we said, okay, we need capital to grow. And we had been a pretty successful social enterprise. We had been somewhere between, for the prior 15 years, between 85 and 90% supported by earned revenues, which were a very small amount per organization served. So it was, in the neighborhood of $150 US currency a year they would get $4,000 worth of technology. And for us, that's not only sustained our operations, but it also allowed us to invest and innovate. And we also generated, the rest of the portion of the percentage was grant income for various projects and things. But we also knew that because we were at a certain scale, in order to get to the next level and build the new capabilities, because we knew we needed to focus on solutions and skills and different things than we had been focused on in the past, we knew that we needed capital to do that. And I had come from a for-profit background in a tech startup before I came here, where we had raised $240 million and filed an S1 to go public and that kind of process. And so, the whole idea of capital markets and capital markets not really being available to organizations like TechSoup, and looking around the sector and seeing that many nonprofits really don't even have the option of ever scaling. They really don't have any way to get there. And if we had great relationships and long-term relationships, but people tended to want to fund what they wanted to do. And we were trying to make those funding proposals, be something that could be cooperative and collaborative, or build a capability that could be leveraged for others. But the idea of doing this kind of investment was really appealing in order to in part, provide funding that was really for our enterprise strategy, and not because you just don't get general operating grants anymore. And you certainly don't get them when you're a large and successful social enterprise who's earning revenue. That makes it a bit harder. The other thing, though, is because we were changing so much ourselves, we really wanted to engage people. We wanted our stakeholders. We didn't want to be only invested in by the corporations and the foundations and wealthy individuals. We wanted to also engage the very stakeholders we were working with. We said, if you're working at a nonprofit managing tech or a library, you probably you care about impact. You might like to think of yourself as an impact investor who has a stake in this kind of utility that TechSoup is. So it was really important for us to engage them to provide guidance to us, as well as the larger funders. And so we designed a model that would allow for kind of very low investment, $50 minimum for those investors. And then obviously we have tiers for larger investors as well. So I'll pause there. Hopefully that addressed what you wanted.
I would just like to say in summary, just to be clear, I kind of feel that TechSoup underrepresents themselves a little bit. They have distributed almost $2 billion of software to 1 million nonprofits, making them the largest network of global civil society in the world. And they would say they're the first nonprofit organization to do a 50-state direct public offering, where they're raising investment capital to grow their operations in the form of debt. And I'd like to say they're the first nonprofit or for-profit in the world that is using this tool. So they are plowing really important ground for democratizing how we go back to the old days for us to invest in what we care about with our own dollars, making it as available as little as $50 up to a $2 million investment or even higher. So Rebecca, it's amazing. Hats off to TechSoup for doing this. A little known fact, they're so committed to democratizing this that the initial estimates for an actual single transaction, I believe, was around $65 per transaction. And this disruptive CEO said, let's still make our lowest investment at $50. So we're willing to lose money because we want to make this available for any nonprofit that wants to invest. The good news is it sounds like the transaction costs are much lower. I think 10 to 15 bucks per transaction.
I think, yeah.
So that's absolutely fantastic. Yeah. On to the right of me, we have Peter Lupoff, who has been a really deep, impactful family office impact investor that now finds himself in a similar membership organization of civil society. He's now leading Net Impact. So Peter, why don't you tell us a little bit of the background of Net Impact, what they've been, what you've been doing, and what you kind of hope to see in the future.
Sure. Do people hear me? Is this on?
It's on.
Is it better? Yeah. Okay. So Net Impact, for those that don't know, is a 27-year organization, chapter-based membership organization, largely campus-based, 95% of MBA programs, undergrad programs throughout the U.S. We're probably 2/3 U.S. versus rest of world. Professional chapters in every major city, including a San Francisco professional chapter, a Sonoma County professional chapter, a Silicon Valley professional chapter for those of you that are in the Bay Area and might care. So the mission is to inspire and equip leaders for a just and sustainable world. And we've been doing that for 27 years. Our formation story, I've heard 3 of them. We've spun out of different groups, but largely the common theme has been that a bunch of academics thought, students shouldn't have to sacrifice values or mission to earn a paycheck. That's 1992 when we started. And that business could be a force for good. So back in 1992, when one of our early members, Seth Goldman of Honest Tea and Beyond Meats, got on a call and said to Ford Motor Company, hey, did you know business could be a force for good? Ford Motor Company said, wow, that's really interesting. Let's set up a meeting and talk about that. And in 1992, that passed as thought leadership in the responsibility space. You fast forward to today, 27 years later, to a degree, there's been a lot of success from this work because our engaged community are now riddling all of corporate America. Every company that we talk to has Net Impact chapter members that are now there. And the sustainability departments that developed largely and frequently from the work we did early on. And we need to remain coherent and in line with this rapidly changing responsibility ecosystem. So I come to be the CEO of Net Impact largely because of work I was doing at campus, teaching impact investing at Yale School of Management, and then I brought it to Fordham, and I would use Net Impact chapters on campus to create events and then showcase my students as a way of creating this sort of a smaller gap between academics and practitionership to get our students in a place where they could make a difference, because the adjective in the mission statement to inspire and equip that is missing is place or engage or to create that opportunity to foment change. Because we don't have 30 years to wait for the world's greatest problems to be solved by a generation prepared to fix it. So part of my challenge, and I think why I am the out-of-the-box candidate for a CEO role with a nonprofit, having never been involved with a nonprofit before, is because I can talk to stewards of capital and companies about the fact that they need to recognize can be their legacy to hasten change now. And I think we're at this really awesome time with Business Roundtable redefinition of a corporation that's expanded to consider all stakeholders. There there's punditry on either side of that argument that would say my firebrand friends on the frontier of impact will say, let's see if they walk the talk. And my old Wall Street friends will say businesses lost their minds. But the reality of it really is, having spent most of my career focused on younger generations through the work I've done, is that it masks the fact that businesses are not anthropomorphic, sort of human-like, prone to dysfunctional human decision-making. They're making cold decisions about how is value created, and the way value is created is changing, and the companies know that. When Dick's Sporting Goods says we're not selling guns anymore, that's not just for public reference. If you look at the footnote to that decision, they also decided to destroy inventory, which sounds like bad business. Why wouldn't you just sell through the guns and then be done? Why wouldn't you try to wholesale them back to the manufacturer? The destruction of it is a cost that they're taking today because they think the actions are going to create a future higher value for the net asset value of that company. So valuation of public companies is changing, and the decision to say that we care about broader stakeholdership, community, employees, supply chain, some of that is because the community, the consumers, the supply chain are their current customers, consumers, their employees. It is our community and that impact that is driving this change in the workplace and the way valuation is. So I'm really excited about having moved from traditional Wall Street to teaching impact investing to then taking that teaching expertise and connections to 150, 160,000 member organization to try to hasten the change, because we don't have 30 years to wait for this community to be in a position to make change. So I kind of think of this as great work on whatever journey that I'm on, which I don't really know yet.
Thank you, Peter. Peter is very open to ideas, suggestions to re-engage new members, old members, etc. So he definitely wants to hear from you. We at the Impact Finance Center, who are we? We are a multi-university academic center, and you can think of us as the accelerator for the impact investors. We identify, educate, and activate individuals and organizations who want to become impact investors. And we are legally, structurally a nonprofit so that we provide non-conflicted investor education. If you really peel back the hood, you'll find that almost all the investor education is taught by somebody who wants something from you. And so we need to create hundreds of non-conflicted investor education providers. And so you'll see, yes, thank you. And so it's obvious of why we need to be here. We need to grow a lot more of those. And one of the tools we use is we basically say, if you're in philanthropy, that is an impact investment with the financial return of negative 100% financial return, attempting positive impact, and all of your investments have impact. And so why that's fun is all of a sudden a negative 50% return investment that we just coached the Walton Family Foundation to do, where Teresa Ish was just here, is a 50% return on our money plus a tax deduction that leveraged a $6 million additional private investment. And so we call that concept full spectrum capital. And we've also added financial innovation. So I'm going to ask Antoinette to go next, because most people in corporate America, regardless of which department you're in, whether you're in the corporate foundation, or we have Moses with corporate venture, or we might have somebody in the supply chain, are really doing financial innovation and impact investing if money is flowing and they're attempting those positive impacts. So Antoinette, why don't you tell us who you are, what your day job is, and your big why of why you're here, and some things you've done in the past and how you're starting to see what could be done in the future.
Okay, you'll have to bring me back yeah. No, just bring me back to all the 5 questions you just asked. But yes, I'm Antoinette. I know that part. I've been working with Eileen Fisher for about 10 years. And Eileen Fisher is a clothing designer, for those of you who don't know. And she's been around for about 35 years, doing a lot of what Peter just described, which is business for good, and really, I think the biggest thing is values-based business. And over the last couple of days, a lot of what the core foundation of what has been talked about is really what are the beliefs that we have around investing, and what are the problems that we're seeing in the world, and how can we use some really interesting tools to start solving them. From a financial perspective, there's also plenty of legal ways to go about doing these things. And over the last 10 years, I was never somebody who thought I would be anywhere near corporate anything at all, ever. And to that end, I felt, okay, well, where can I do the highest good? And that landed me in a corporate something, which again, I am still shocked by. But the reality is what I was able to do is we started a young women's leadership program, and that's what I came in to work with Eileen Fisher to do. And in the doing of that, we realized this is going to be really cost intensive, and if we do this, we're going to just spend down everything that we have in our foundation within just a few years. And so we thought, well, what if we start calling back Eileen Fisher clothing and we try and resell it and see what we can do with that. So we started a little recycled clothing initiative, and we thought, okay, we'll just call back some gently worn Eileen Fisher clothing, dry clean it, resell it. We got millions of clothing. We have 1.4 garments that we've got back at this point. And by year 5 in this, we're getting hundreds of thousands of garments. We are filling warehouses, and there's like two of us and a consultant in the foundation trying to figure out how to do this. And we said, well, who could we get to run this retail operation? We're sitting next to, obviously, Eileen Fisher, Inc. So we sold that into the company. And I tell this story in a way that is kind of narrative, because what we did was we were effectively taking clothing and keeping it out of the landfill, which, and starts to close the loop on the life cycle of the garment. We were funding our Young Women's Leadership Program, and then, also building out other kind of makers workshops and, a whole different culture around fiber and textiles. So that's kind of the last, so then, the biggest thing that I would say is that we didn't know what we were doing at all. We didn't have a tool or somebody who said, what you could do to, that wasn't there. We just said, well, what do we have? What resources do we have currently? And what rules can we bend to make it happen? Whether it's an IRS regulation or, some law that exists, what can we kind of figure out how to maneuver? And so I think that's kind of always been how Eileen has operated, how the company operates, and that's what draws me here and to be in this kind of conversation, because I think that when we think about impact investing, we haven't called it that. We've called it business for good. We've thought, okay, well, how can we improve the lives of our supply chain? How can we improve the lives of our customers? How can we improve employee well-being? And we've been considered ourselves a quadruple bottom line business before triple bottom line business was something that, was really applauded. And we're just figuring out, how do we articulate these things to the world, what we've been doing, and how do we learn more tools that actually exist that we can keep evolving and growing. So, and I think that's the other big thing, that when things don't work or things stop working, we kind of say, okay, what's next then? We learned this, and let's stop doing that. And now I'm in year 10 of being with Eileen, which is also year 10 of doing some of the projects, and we're letting go of a lot of things, and we're figuring out what's next. So I've been really getting a lot out of sitting with all of the wonderful people who've been here for the last 2 days in Impact Finance Center and Steph. I feel like we have these great brainstorms, and then I get really excited. So more of that, and I would look forward to brainstorming with all of you.
Thank you so much, Antoinette. So we have this full spectrum capital, negative 100% to say 10x money, and then we have kind of impact and positive and negative externalities. So impact first or finance first from that perspective. And so our next two speakers, we have Moses from Corporate Venture from Orange, and we have Ryan from Autodesk Foundation. So why don't we start with Ryan? And both of them have had multiple roles and jobs in the multiple sectors of financial innovation and impact investing. So why don't you talk a little bit about where you came from, what you're doing now, and why you're also involved with this initiative?
Sure, thank you. I guess the common thread with the three of us that have just spoken is that I never thought I'd work in philanthropy, and I never worked for a corporate, and here I am doing a little bit of both. So my background is originally as an engineer by training, and if you're an engineer by training, you happen to know what Autodesk does, and so I was quite enamored with their products at a young age, but never thought, ultimately it'd come full circle, and I'd be working for the company that, whose tools I used in the past life. Early in my career, I was a traditional venture capitalist. So I was really interested in helping new types of innovations be able to scale, and ultimately the problems I wanted to solve with those technologies was climate change. Well, it turns out in the late 2000s that the traditional venture capital model applied to technologies that are hardware-based and perhaps don't have the types of scaling pathways as traditional software or dating apps. That just didn't compute. It did not work out. And you saw a lot of traditional venture capitalists move away from investing in science and engineering-based innovations. You ask me, I think it's a crying shame, right? These are the types of innovations that are going to help us be able to address problems like climate change that really freaking matter. And so if these entrepreneurs are badass and these markets could be potentially transformative, right? Like we're seeing with Beyond Meats and others, what does that mean? I don't think it means the asset class is wrong, right? I don't think it means that the entrepreneur is wrong. I think it means like the asset class is just misaligned, right? The risk reward in terms of your traditional investor methodology just doesn't line up there. So I started poking and prodding to see what other types of financing mechanisms might exist, and it turns out at the same time there were some folks in Boston doing something similar and thinking, hey, philanthropy is kind of an interesting idea here. There's $600 billion in assets under management where its sole purpose is to invest a minus 100% investment into organizations that deliver impact outcomes. So is there an opportunity to be able to use that $600 billion in assets to be able to point that towards market-based solutions that are driving their innovation in science and engineering? That organization was called Prime Coalition, based in Cambridge, and I led their investment operations for 18 months, and it turns out one of the forward-thinking organizations that was partnering with them as a philanthropist putting capital into their fund was Autodesk through their foundation. So flashback now 2 years, I was poached over to help build out an impact investing practice within Autodesk through our corporate foundation, thinking not only about how to use our on-balance sheet capital and our off-balance sheet capital to invest in early-stage companies, but also what the heck do you do once you make an investment? Is there a lot of post-investment support that a large company can do to try to accelerate that timeline and ultimately have the impact outcomes we care about? So a roundabout way to getting to a big company and to be working in philanthropy, but obviously it's an amazing space where you're starting to see more and more corporates and Goliaths of TechSoup and Net Impact and others coming together to think about how to be able to set the standard for how corporates can get into impact investing. It's exciting.
Thank you so much, Ryan. Moses, you have had a long career in this space across many different institutions and are clearly deeply passionate about growing and fixing the systems. And why don't you explain a little bit about what you're doing now in corporate venture, and if you had a magic wand, what you'd like to see?
Magic wand, okay. Let me come back to that. But really quick poll, how many folks here work at a large multinational corporate? How many of the folks here work in, like, let's say, the startup ecosystem? And then nonprofits or the civil society sector? Awesome, cool. That's very helpful, thank you. So I joined, as Ryan mentioned, that perhaps you didn't think you'd be at a place like Autodesk. Never in my wildest imagination did I think I'd end up working for a telecom company, no less a French telecom company. I spent about 10 years in Wall Street, principally working in the sustainable finance arena. Moved out to the Bay Area with a startup through an accelerator program called Plug and Play, and then joined this company called Orange. What is Orange? We are a large global telco headquartered out of Paris. We have about 150,000 people. We operate networks directly in about 8 European markets, in about 19 Middle East and African markets. I'm a part of an innovation and venture team based here in San Francisco, where we do 3 things: research on emerging technologies and business models, product innovation, which in practice means pilots, partnerships, proof of concepts, and then lastly, through the work that we do on A and B, we pursue investments in early stage companies. The one thing I will say that Peter mentioned was there's been established, I would argue, over the past perhaps 20 years, this notion that sustainable business is a thing, that investors don't necessarily have to give up economic value in exchange to pursue environmental or social kinds of outcomes. What wakes me up every day, perhaps I'm going through a bit of a midlife crisis, is that we need to accelerate this change. And that's why I'm here. That's why I joined this company. And so I work in an innovation team where we do a bunch of different things. And in part, we pursue investments in early stage companies. And why that gets me excited is when we think about the digital divide, the fact is, in our African markets, for example, the smartphone penetration rate is perhaps somewhere in between, let's say, 13 to 20%, depending on the market. Everyone in this room, I'm assuming, has a smartphone. But what about the $20 feature phone that our customers use? And how can we enable more access to enable the bridging of this digital divide? And how do we provide more agency for our consumers to have better quality of life? And so one area that we've been spending a lot of time, just to give one quick proof point, is around digital finance. So we are, like I'm sure some folks have heard of here, called M-Pesa. We are a mobile money operator. We're actually larger than M-Pesa in terms of accounts. We're dispersed across more markets. But what we do is we enable consumers who have no traditional access to banking services to have banking through their mobile network. And so we've invested in a few companies, but just to highlight a couple, one is we're investors in a firm out here called PayJoy, which enables the collateralization of a smartphone so that consumers can pay over an installment plan. So this is an access to finance play. And we've also invested in a company, for example, called Air, which is taking structured and unstructured data to underwrite credit scores. And our thesis is that as these companies partner with, engage, and scale with a company like Orange, or if you're French, you say Orange, then you will create more access and hopefully impact. There is still a lot of debate on where the state of the market is on impact measurement. We are learning a lot about this currently, and if there are folks in this room who have that specialization, I'd be very keen to interact and learn from you. So thank you very much.
Thank you. We're going to do one more round of questions and have 2 of the participants come up and say a couple of quick words before we come back and mingle. I'm going to go off script a little bit because these people up here are very kind and very generous. And so I always like to ask generous people, what do you need? And so if these lovely people in the audience could help you out, what would that look like? And then what are you hoping to partner or give to the world? Like what is if you had that magic wand wish, what are you looking to? What's your need and what's your wish and what can you offer?
First. Okay, what do I want? I'm embarking on like a mission to get long-term sustainable financing for net impact, and one of the ways I'm describing us to potential funders is the way NPR does their fundraising, where they say routinely when you're trying to listen to radio and this ongoing fundraiser, they'll say, could you imagine a world without NPR? And so I've taken to be saying to people that suggest in their mission it is to foment this just, sustainable world, that we are a focal point to get to a particular activated community. And can you imagine a world without us? We are an important part of the way, as you mentioned, that we hasten this change. And so any ideas we have in how we can create financings, we've had lots of conversations. I was explaining to some of your colleagues here earlier, I only remember or get about 90% of what you say, because it's really fast and ahead of me, so I'm trying the best I can. But we're going to try to solve some things, but anything that you think can be helpful in creating long-term viability for an ecosystem like ours that is iconic. We speak for a demographic. We work with that demographic to activate them and get them placed. And we will find our way, but I think that we need corporates and nonprofits to support this ecosystem. Perhaps we need to collaborate as partners in this ecosystem to get there and not compete for the same dollars. And what I hope to happen is to hasten the rate of change, to get our community into places where they can make a difference sooner, and to get, as I mentioned, the capital stewards and the stewards of corporations to recognize that this can be their legacy to help foment change sooner.
Thank you. Let's just keep going down the line.
Okay, I was thinking about it. If what I need right now is actually capacity in my team, so any of the folks who are really interested in corporate financial innovation and are wanting like an internship or to be able to talk about how to be able to apply some of these skills that you've learned over the last few days, please come talk to me. What I think that kind of builds off what you were talking about there, Peter, is this sort of coalition of like-minded folks within this ecosystem who are starting to think beyond just one myopic term for success in their investments is something that we think a lot about. A traditional investor might think, I need to optimize for financial return and financial return only. As you see more people from the impact investing community and now the corporate impact investing community, what was myopic in saying financial return is success then becomes financial return and impact return becomes success. And for corporates becomes even muddier because it's financial return, impact return, and strategic return is success. I think we all believe that if we're thoughtful about our investment decisions at the onset, that you can actually capture more value throughout the length of that investment because you're thinking about those externalities and being purposeful in your decisions. As more and more people start to think that way and think across the full spectrum of capital, those coalitions become a movement. And that in itself is powerful. So these are important. If I could wave a magic wand and get anything, I think sort of what you were talking about, Moses, in terms of quantifying impact outcomes, right? If we're starting to think purposely about how we drive financial value, strategic value, and impact value at the onset, how we quantify that and bring that into our investment decisions early and then manage towards those throughout the length of that investment, that needs to be better. I think the sector is moving that way, but I think collectively we all have a responsibility to continue to push that rigor forward. So I'm excited about it, but there's a lot of work to do.
Thank you, Ryan. Antoinette?
Well, I have so many things now. So the first thing is that just coming from the Eileen Fisher space, I'll say this, that we know that we have these goals of reaching as close to 100% sustainability as we can get to by 2020. Here's 2020. We're working on it. We're like 90-something. But we know that even if we got to 100%, we're a tiny drop in the bucket of the industry as a whole. And we know that the fashion industry is the second or third largest polluter on the planet. So what we're talking about is not just one company doing it really well or better or less bad. We're talking about all of us. And we're talking about actually recognizing that anything that we do, like Steph's been talking about, what if we can do this for, the supply chain, the small supply chain supplier, like somebody supplying something and, and it would not be logical in our current world to say, oh, I'm going to help this other business grow, unless you can find a way to make your own business grow. So I think the question is, how do we just support each other and lift each other up just for the sake of that, which is crazy, right? It's just so, out there. But the reality is that's what does lift each other up. So to that end, I go a little bit further than that. So the two things that I think we need in order to be able to do that, because I think collaboration sounds nice, but what does that mean? How do we do it? I think that it requires listening and truly engaging with each other, and then with ourselves and understanding what our values are. So that just requires being human, which for me is just breathing. It's sitting in my body, being in myself, and being fully here, and then saying, what do I value? What problems need to be solved in the world? How can I apply my energy to that? Who else is doing that? How can I contribute with them? That's my big one wish, that we listen, that we activate ourselves, and we connect with what we really see is needing to happen in the world.
Thank you.
I think you should have gone last. No. So you stole my word, but that's okay. I'm still going to make my point, which is I think you're all here because you have some kind of special talents and some kind of interest in impact investing and impact, presumably. And what I was going to say is be a contributor. That you can be a contributor in so many different ways. I mean, you heard from the diversity of everybody's backgrounds. I don't think any of us knew we were going to arrive, exactly where we did, so we couldn't have painted that path, right? But there are many ways to contribute, and you can certainly be a direct contributor to TechSoup with investment, or if you are interested in employment and lots of things like that. But also just, I think, don't be afraid to stick with what you think really makes sense. And when you see things in the universe that don't work exactly the way they should, be willing to be in the long haul to kind of help other people see it, or to influence what you can, or to learn maybe that you're wrong, because maybe somebody else thought about that already and there was a reason it didn't work. But that kind of engagement and contribution that is values driven. When I think about the lessons we've learned in our impact investment, it's not only that we got a lot of advice from a lot of other smart people, all different kind of stakeholders, but we also found people that were sharing our values and were driven by those values, and we stuck with those even when it was difficult to figure out how to be as inclusive as we wanted to be. We said, well, that's important, and we're going to solve for that. So we just have to kind of look for other solutions. So I just want to encourage everyone to figure out what your path is for contribution.
So I have a lot of things on my mind, but I'll try to be very succinct. Number one, impact measurement, ex ante, prior to investment, ex post, after the investment, how to manage that. We're still in a very early stage of what the state of the art is there, but there are folks here at NGOs and civil society organizations, and we have a lot to learn from you, so please do reach out. The question I've been thinking a lot about, that if someone has a book author's name that I can read, I would buy it right now on Amazon and get it delivered in 2 days. But the question I've been thinking a lot about is how can business innovate and accelerate their business model innovation towards sustainable development? And business model innovation research has only been around for, let's say, 15 or so years, but we've substantiated that companies that integrate material sustainability issues potentially can outperform. What we don't know yet is how can companies accelerate that innovation. We know Michael Porter's CSV framework exists. We know Stu Hart's work. We know Dan Estes' work. We know a lot of diagnostic tools exist. The question that I think management executives don't have the answer to, I think, and again, if you have the answer, please let me know, is how can you take a Microsoft, an Orange, an Autodesk, Eileen Fisher, these large, complex organizations, and figure out ways, not just proof points. What I do, largely, they're proof points that substantiate innovation and impact. But what we're really looking for, I think all of us here, and most of us aren't patient enough to wait, is to figure out how to transform the future generation of what society is going to look like. And if we don't act now, well, I don't know what's going to hold in the next few decades, but if someone has that business model innovation work, please find me, and I'd love to have that conversation. Thank you.
Rebecca, would you like to say a few closing words for us? Thank you for hosting us for the last 2 days. Thank you for this event tonight. Thank you, all of the panelists. I believe we've had about 12 or 13 panelists participate over the 2 days. And I am sure many of the panelists up here can stay for a few minutes and answer some questions after we're done. But would you like to say a few closing words for us?
Well, I don't want to be between everyone and drinks and food if there's anything still left there, but I will just say you were a great audience. I mean, you really paid attention for a long time and stayed engaged. You know, we can notice that. We can see those things, unless the lights are too bright, but they're not here. So anyway, we're very glad you were here, all of us. I speak for, I think, when I say that. And Steph, thank you so much for just having the creativity and imagination to put something so great together. I mean, learning is something that's important to most people, and definitely I would agree with that. And I think that, you know, our opportunity to mingle in this crowd will make our work better as well, and probably I share that with the other people up here on the panel. So thank you, and please hang around and talk.